Hello, hey guys, it's Friday. Super excited about this Friday. Um, we have something really exciting going on tomorrow that I'm not good at surprises, and so I'm not going to say anything, but it's going to be a really good Saturday. So thanks for joining in. My name, for those of you who don't know me, is Megan Nas. I am a CPA, ex-corporate, used to work in the corporate world, and now I'm, a business owner. So I'm going through the trenches just as you are. And I help other business owners who want to do the right things with their money and help them build solid foundations so that they're confident with their money and not feeling the sense of panic and dread when they think about their money. So today I'm having a weird glare on my screen, so I'm going to modify it here a little bit. And for those of you who were with me a couple weeks ago, I just want to share that my office is now getting cleaned out because I finally made it not be a dumping ground. So in the background, you're not going to see a bunch of stuff like you did in the past. Anyway, so today, what I want to talk about today is taxes. And I know that it's September, it's not even close to, well, it's kind of close to tax season, but taxes are something that you should be thinking about throughout the year in your business. And it's really important because if you can keep it on top of mind, then you're not going to get surprised or get caught off guard when it is tax time and it's time to file your tax returns. And that's the worst. If you get behind on your taxes, trying to play catch up and then be proactive at the same time is so challenging, and it's almost like this defeating feeling. So I want to help you get set up to where you are saving for taxes, and when it's time to file your tax return, you're set and you don't have to worry about it. But first of all, what I want to start out with is kind of chatting about who needs to pay taxes and just some of the different business structures that go along with taxes, because a lot of people will think, well, I don't have to pay taxes, but my business has to pay taxes. And so I want to chat about that a little bit. And then I want to talk about estimated taxes and who needs to pay those and when those are due and how to do that. And then lastly, I'll talk about actually going through the process to save for taxes. So the first part that I want to touch on is the business part of the taxes. So businesses don't really pay taxes unless you're organized as a C corporation. So if you have a business that is an LLC, or if you have a business that is an S corporation, or if you're just a sole proprietor, your business doesn't pay taxes. Those are called flow-through entities. And what that means in layman's terms is basically all of the income is reported, and then you pick up that income and report it on your personal tax return, and you pay taxes on that income at that time. So it's different than when you're working for someone and you're receiving a W-2. When you receive a W-2, taxes are being withheld from each paycheck and sent in. And as a business owner, that's not happening. So you're responsible for doing that. So your business is not the one who's paying taxes, which is also important because if you're doing your bookkeeping, or if you have a bookkeeper and you're making tax payments, whether it's estimated tax payments or historical tax payments, you don't want to show that as a business expense because it's not. It's a personal expense. Some people will also think well, I'm an LLC, so that's going to offer me some tax savings. And it can possibly in the future if you're not filing as an S corporation. But an LLC is taxed exactly the same way as a sole proprietorship. So the LLC in itself does not offer you any tax savings. So I just wanted to put that out there. So in your mind, you're not thinking, well, I don't have to pay as much in taxes because I'm an LLC. So I just wanted to throw that out there. There is a lot of really cool, flexible things you can do with an LLC. So if you are starting a business, or if you have started a business and you're considering doing an LLC, for tax reasons, I think it's a really good idea just because you have some flexibility in the future, but that's definitely something you'd want to talk to your tax person about, and even possibly an attorney about, just to see what the different liability stuff is. So when you are a business owner and you have a business, you have to pay tax on your income in two different levels. So if you're filing as a sole proprietor, or if you're filing as the only owner of an LLC and you're just being taxed like an LLC is taxed, then you have to pay 2 layers of tax. You have to pay what's called self-employment tax, and then you also have to pay federal and state income tax. So those are all things that you have to consider on your taxes. But I'm going to show you a way at the end to just cover all of it, so you don't have to worry about it. But I just want to explain this to you so that when you hear the term self-employment tax or anything like that, you're familiar with what that means. So when you are an employee and you receive a paycheck, remember how I said the taxes are taken out on your behalf. So what's taken out is Social Security, Medicare, federal tax, and if you have a state that has income tax, state tax. So all of that stuff is taken care of and sent in on your behalf as almost like a prepayment of the taxes you think you're going to owe. When you're self-employed, you have to pay self-employment tax, which is Social Security tax and Medicare tax. And you not only have to pay your portion, you also have to pay the business's portion because you own the business. And that percentage is like 15.3%. So when you're calculating your tax, what you think your tax might be, you have to keep that like 15% as a guaranteed tax that you're going to have to pay if your net income is more than $400. So keep that in mind. All businesses that are sole proprietorships, or if you're the only owner of an LLC and you're filing that way, then you have to pay self-employment tax. Then you also have to pay, federal income tax and possibly state income tax. Those are when you hear people be like, oh, I'm in the 22% bracket or the 12% bracket. That's what they're referring to, is like what bucket of tax rates do you fall into? So I don't want to go too far down the rabbit hole with this because it can get convoluted and you don't really need to know all the details, but I just want you to be familiar with these terms and stuff like that. So I just want to say, if you're filing as an S corporation, that means that you are actually paying yourself W-2 wages from your business, but you still have to pay tax, regular federal and state income tax on the net income of your business. So my point is, regardless of how you're organized, you're going to have to consider, and you should be considering, estimated taxes and saving money for taxes, because you're going to have to pay them if your business has a profit. So I hope that wasn't too crazy. If you have any questions or want me to clarify any of that tax stuff, let me know. But like I said, you don't need to learn about all of the accounting and the tax side of it. You just kind of need to learn, like, how much do I really need to save and how do I make these payments to the IRS? So estimated payments, you might have heard the term estimated payments, or you might be making those estimated payments or familiar with those. What those are is the IRS in your state, if you have state tax, they basically want their money throughout the year. They don't want to wait until you file your tax return to get their money. They're saying, hey, we want you to pay us what you think you're going to owe on your taxes ahead of time. And then when you file your tax return, we'll actually calculate what you actually owe, and you either will get a refund from the government or you might have to pay a little bit more. But the IRS and your state, they just basically want their money throughout the year on an even basis. So they have a quarterly system where you can prepay the taxes that you think you're going to owe each quarter on a quarterly basis. When you're just starting out, this can be challenging because you're like, I don't know what I think I'm going to owe. So it's definitely more challenging when you're starting out, or if your income is really varies and volatile. Like, it can be challenging to figure out what you think you're going to owe. And that's where it wouldn't hurt to talk to the person who's preparing your taxes and have them help you figure that out. I'm going to show you some tips on how to figure it out yourself if you want to figure it out yourself. But talking to a professional in that instance, when you're like, I have no idea, and you don't have any historical basis to go on, is really important and a good idea. Plus, it takes like stress off your shoulders, which is also always a good idea. The other thing that you can do is, if you've been in business for a few years, you feel like your income is pretty consistent, like, I'm doing about the same amount this year as I was last year, it's relatively consistent. You can take what you paid in estimates the previous year, or what you owed the previous year, and divide that by 4 and send that money to the IRS in your state each quarter. And that's a way just to prepay your taxes. So when people say estimated taxes, it's prepaying. And again, it's not like once you send the money to the government, it's gone. If you paid in too much, then you'll get a refund back. So it's just this estimate, basically. So that's another good thing is some people will, in my years of doing this, I've worked with like some people, I don't want to like put a typeface on this, but people who are like, the government's not getting my money any sooner than they have to. And if you don't send in your estimated tax payments, you could be penalized. Some people, it's more important to hold on to their money than it is to send it to the IRS because they might need it for some reason and something like that. So it's a very personal choice, like whether or not you want to prepay those estimates or not. But if you don't pay them and you're required to, then just be aware that you could be penalized. The penalties aren't huge, so it's not a huge deal if you don't pay them, but it's just something to be aware of that you definitely should be paying them if you can and want to. So, and when you figure out how to pay your estimated tax payments, it's super easy. You can go online and pay them. So the IRS has, you can go to irs.gov and there's a payments button and you can go and make your estimated tax payments there. So it's not hard to do once you figure out the dollar amount that you want to pay. But what I like to do and what I like to help businesses with is figure out how to save money for their taxes. So when they do have to make an estimated tax payment or when they actually file their return and they do have to make a payment, they're not caught off guard and not draining their bank account, because it's really deceiving if you look at your bank account and you're like, I'm doing really well. I have this much money in my account. And then you write a check to the IRS and like a huge chunk of it's gone. I mean, that's just defeating in itself. It's like, oh my gosh. So what I like to do, kind of piggybacking on last week's live, is I like to create a completely separate bank account. And I know you're probably thinking like, God, how many bank accounts do I need to have? But it's not that hard. And the bookkeeping for having a separate bank account is not that difficult. Plus, if you take money out of your business account and you move it to tax savings account, you're not going to see it. You're not going to think that it's available to spend. You're not going to pay yourself that money. You know what I mean? You're earmarking it for the government. And you're like saying, this is how much money I think that I want to set aside for taxes. And the cool part about this system is you're setting this aside in a business savings account that you own. So it's not like you're taking all of this money and just sending it to the IRS. You're still in control of that money and it's still your money, but you're just earmarking it for taxes. And by putting it in a separate savings account, you're just out of sight, out of mind, kind of changing your perspective on what you actually have available in your business account to spend on business expenses. And this is going to be super helpful because if you do that, then you won't spend the money that you need to pay taxes with, and once you do that, and if you file your return or if you don't pay your estimates and you're like, great, I have to pay my taxes, I don't have any money. So then you get behind and then you don't have enough money to prepay your estimates for the current year. And it's a cycle and it's a hole that's really hard to dig out of. So I've seen and worked with a lot of people who have been in that situation, and it's just this added stress and added weight on their shoulders. And I want to try to minimize all of that for you. And this can be automated. I mean, this can be so simple. If you set up a separate tax savings account and then take a percentage of your deposits, and you can do this on a weekly basis. I really like to recommend weekly because then you get in this habit of doing your money stuff on a weekly basis. And I don't know, I just like weekly. Some people do it semi-monthly, but I always advocate weekly, especially starting out if these processes are new to you, because you're building a habit. And then, so what you do is sit down, look at your bank account and be like, okay, what was deposited into my account since I started? Or since last week, since the last time I sat down and did this. And if this is the very first time you're doing it, sit down, look at your bank account right now and be like, what's in my account? And then take a percentage of whatever's in there and transfer it to this new business tax savings account. And I like to do percentages because if your income is really high, or if your deposits were really high, you're taking a larger portion of that money and moving it over for taxes. And if your deposits or your income for the last period were not that high, then you're only taking a smaller percentage. It's not like you're setting yourself up to think like, I have to move $500 every week into a tax savings account, whether the money is there or not. So by using percentages, you can do it. And if your business can't afford to take 10% of its earnings and put it into a tax savings account, then it might be a situation where you have to like go through your business expenses and see if there's anything that's not essential to running your business, because saving for taxes has to be a priority. So the percentages that I work with and that I advocate, they're kind of all over the place depending on the type of business that you're in. So if you are in a business that like a service-based business, you don't have a lot of expenses, you don't have employees, you're not paying rent, you don't have a lot of overhead, those other costs that are essential to running your business, then your tax savings percentage might be a little bit higher than if you were running a brick and mortar store where you have rent and employees and utilities and all of those things. So the percentages that I'm going to talk about here today are just a ballpark. And if you're just starting out and you've never done this before, I mean, really anything that you're going to do is better than nothing. So don't let the fact that you don't have an exact percentage stop you, but I just want you to find what's comfortable for you. And then as you file your tax return and continue your years in business, you're going to find a percentage that works out perfect for you. So if you are in a service-based business, you don't have a lot of expenses, you don't have a lot of overhead, your tax savings percentage might be around 20%. It might be, because it might be around 20%, it might be around 25%. If you are in a business that has a lot more expenses, or if you maybe hired a coach and you went to a couple conferences and your expenses are a lot higher this year, then maybe your percentage doesn't have to be quite so high and you can get away with like 15% or 10%. So you might have to just look at your numbers and look at what your revenue has been so far this year, what your business expenses have been so far this year, and see, do I have a lot of expenses? Do I not have a lot of expenses? And then pick a percentage based off of that. If you're like, I don't want to spend the time doing any of that, it sounds like way too much work, maybe just start out with like a 15 to 20% and just be like, this is what I'm setting aside for taxes. And again, this isn't money that you're actually sending to the IRS. This is money that you're just setting and earmarking into a separate savings account. So it's still your money. You're just saying, hey, I'm going to allocate and designate this for taxes. And then when it is time to pay those estimated tax payments on a quarterly basis, or when you file your tax return and you need money because you might owe some taxes, you take that money from this estimate or from this tax savings account, and that's what you use to pay your taxes. So you have that money earmarked. And if you end up paying and owing a lot less or less than what is in that account, you can either let it carry forward, or that's just a bonus back to you in your business. So you're not doing any kind of disservice to yourself by taking money and allocating it to a separate business savings account for taxes. You're learning to run your business on less money, which makes you be frugal and smart with your money instead of just buying the next shiny new thing, and really thinking about whether or not your expenses are generating some sort of return for you. So it's just easier. And then you're setting yourself up and building really good foundations for when your business does go to that next level. Or if you have a really good year or month and you're like, wow, I made a lot of money. You're like, oh, I already have this system set up to save for taxes, so I'm not going to be putting myself in a situation that's challenging. And even if you're like, I don't want to think about money, I hate numbers, I hate math, and I'm going to pay someone else to do my taxes, I don't even want to think about it. Like, this is easy enough for you to do, is set up a savings account for your taxes, transfer a percentage of your revenue in there, and then you don't even have to think about it. So I got into a lot of detail earlier about like LLC and self-employment tax and all of these things. But if you're like, I don't want to think about that, the only thing you have to do two things: set up a separate business tax savings account, and then on a weekly basis, transfer a percentage of whatever you made that week into that account. It's easy. You can set up an Excel spreadsheet so that you type in your deposits and it automatically calculates 10% for you. So you don't even have to do any math. Like, let Excel do the work for you. But if you can get in a habit of doing this, it's going to really set yourself up for when your business goes to that next level. You're going to have so much less stress because you know that you have the tax part and the tax savings covered for, and then let the professionals do the tax return. You don't even have to think about it, but at least you have the money there if you need it. And then it's also psychologically not quite so defeating when if you did have to write a check for estimates or for taxes, you don't have to take that out of the account that you're looking at for all of your business expenses. So you're not seeing your bank account go, like be up and then like drop when you make a tax payment, which is, there's a psychological component to it. So anyways, super fun stuff. Taxes, it's not as bad as you think. I mean, it sounds really scary, but it's not as bad as you think. So I am going to do, I think I'm going to do a live or put together some sort of mini workshop training on picking the right entity for your business, whether or not like an LLC or an S Corp would be better. But I think I might just do a workshop because it would be kind of confusing doing it in a live. But if that's something that would interest you, let me know. And I'll put you on a list to keep you updated on that. So I hope I answered your questions. I'm not going to take any more of your time. I hope you guys have a good Friday. If you are watching the replay and have questions, go ahead and put that in the comments and I will get back to you as soon as I can. And I hope this clarified some of the tax stuff for you. If not, let me know and I will answer any questions you have. So anyways, I'm going to sign off. I hope you guys have a great rest of the day and a good weekend. So we'll chat with you next week. And maybe even in between. Talk to you later.